Holy smokes guys, skip the introduction. The markets has taken a huge dive and I want to go through one of the stocks that's taken one of the biggest dives in the ASX to date. Now this is kind of a different setup that we've got going here, but the stock that we're going to talk about today is AfterPay. I actually don't know if you can see this clearly on the screen, but it's AfterPay, which I think has taken about a 70 to 73% dive in its stock price from its all-time high earlier this year. So let's take a dive into the stock and see why that's happened and what's been the case in a scenario to plummet the stock to its price at the moment. On Wednesday, March the 18th, and of recording today, it's actually the 19th, which has taken a bigger dive. It actually took a 33% dive in share price in just one day. 33% within just one day. Like, that's insane, even for AfterPay. So having a look at history to provide a little bit of context, 2 years ago, the share was at $5.45. Can you believe it? I mean, $5.45, it'd be a steal to get it at this price today. And of course, this is when business was domestic and things were starting to pick up and people were slowly becoming familiar with the brand and service, because buy now and pay later has not been hugely popular before then. Now, it took Australia by storm by taking on so many partnering retailers to the point where now they have over 43,200 retailers globally. That's a lot of shops, mate. So with the huge amount of merchants they have, it's a great opportunity for them to get their name and brand in front of many customers and get customers to be familiar with the buy now, pay later service. And I think a great thing about AfterPay is in the name itself. I mean, the name literally describes how the service works. You pay after you've made the purchase, which gives the brand some serious distinction from its other competitors like Sezzle, even Zippay, or I can't even remember the other names. But anyways, that's how much of a moat it has in comparison to its competitors. So having this preconceived notion of what the service is, it's not hard to actually click on the AfterPay logo and then learn how to use the service, or ask somebody within the shop on how to use its service as well, because we all have a preconceived notion of how it actually works. Anywho, with the news of their expansion in the US is where we can see things start to pick up quite drastically in mid-2018. And here's where we see the share price go all the way up to its peak during this period at $19. Then we see a drop off in the second half of 2018, which is when I had lots of money into it. Refer to the video up there or in the link in the description below. Now at this point, the share price went all the way down to $11 due to parliamentary inquiry into the service and whether AfterPay was providing loans or marginal credit, which would place them under some more stringent regulations. During this time, I remember there was lots of fear regarding possible new laws that could stop the growth of the service. But the more I saw Nick, the CEO at the time in Australia, put so much attention and transparency in offering Parliament all that they needed, the more I was actually put at ease. So after all this had passed, we saw the stocks rise again quite drastically, with their expansion in the US and the UK working out quite well. I sold out at $25 thinking that there's no way that it would shoot up to $30, but well, it went all the way to $41.14. And this was around February 2020. And I wished I had kept my money in there at this time, because boy, oh boy, would I have made some serious dough and not had to work and taken, a long holiday. So now here we are in the past month. From its massive peak, it's taken a huge dive. Considering all their top line metrics were positive in terms of merchant sales and customer numbers, the operating cost is extremely high as they look to expand at scale in the US, UK, and Canada. If we look at their costs, we have an increase from $20 million to $36 million in talent acquisition to fund their expansion. And now they've hired a lot of high-end talent from, people from CBA and other big top companies to, fund this growth. However, this was an increase of 72% in terms of cost to acquire some, high-end staff. And then there was also a spend of $32 million in marketing and an overall increase of $48 million in operating expense, all of which is done so in order to optimize their retailers' integration with AfterPay and to increase the funnel in customers, which kind of creates a win-win situation for both AfterPay and their merchants in getting more customers. So with the increase in expense, this is obviously going to affect cash flow, and for AfterPay, they're, in the red with the expansion, which is nothing really new. During its peak periods, everybody had been buying into AfterPay for its growth potential in the future. Nobody was buying for cash flow, everybody was buying for the brand, and because they were succeeding in their expansion. So you can clearly see that they were going with what has been working and what's been getting them the growth in terms of share price and also market share. Now with their expansion over in the US, this has gotten them into some trouble. And they've recently come to a settlement which resulted in a refund of $1.5 million to users of the service because they were accused of offering illegal loans without a license in California. Now the whole premise was that AfterPay said that it was not offering illegal loans, but was a consumer credit sale product, which really was scrutinized in Australia also, so I'll just leave it at that. So with more bills coming up, this is clearly not a good scenario. Like, you really don't want to be flushing, $1.5 million down the drain when your cash flow is in the red and the cash that you use was to expand your operations in the US, which is now kind of illegal in a state. Anywho, the final punch is that with the new virus going around, the Roni, the Rona, the CV, it's really stopped people from spending, and this has obviously taken an effect on its growth. And I mean, it's not hard to see, but this is especially the case if people aren't able to work and therefore have no means to spend their money, which ultimately affects the growth of AfterPay, which they put so much money into to grow the company. It's a spiraling effect, and it's got a lot of shareholders shaking in their boots and selling out hard. And the other issue is also the amount of volume in shares that AfterPay has, issuing, a few share purchase plans over the period of even when I was investing into the company to raise revenue for this growth. Now, this is common for many companies to establish this practice, but it really puts into question whether their model of business is actually making them a lot of money. Because if it was making them a lot of money, they should be able to use that money to fund their growth. But despite all this fear, I think what's more important is to look at the overall trend in payment services, including the old dogs such as MasterCard and Visa, who've also taken a beating for the same reason. And so although it looks bad now that nobody's spending, people will still use cashless services like MasterCard, Visa, and potentially AfterPay. This could be a great opportunity to make some money whilst other people are fearful, but you could also be catching a falling knife, which you never really want to do. Leave a comment below, let me know are you buying AfterPay, are you holding out, what price point are you going into it? I personally might be looking into it into the future. I will not say what price point I might enter into, but it's definitely one of the stocks that I've seen a greater result in, and also a service that I think has a great moat over many of its competitors. And although these are dark times, the company is still seeing growth, and we see that in terms of their number of merchants and customer spending and all that type of stuff. So I think it can bounce back. But that's it, guys. Leave a comment, leave a like. I'll catch you guys in the next video. Ciao.